Welcome back. Time for Under 30, talking rocket companies. Joining me now, George Tsilis, Senior Markets Correspondent for the Schwab Network. George, a name we've come back to from time to time, and it seems like recently, every time we do, the story looks a little better from a chart perspective. Really nice year-to-date performance, George. What do you think's driving this resurgence we're seeing in rocket?
Well, obviously, it's not what's going on in the home market. If you look at home builders, if you look at building supply companies, been affected because there seems to be some sluggishness in the mortgage markets, origination sales, existing new home sales, and so forth. But that's not the case for rocket companies. I mean, this is one of the leaders in home financing, real estate services, both secured and unsecured loans. But they've been moving pretty aggressively in real estate services with the acquisition of Redfin, and I think that's essentially what the culprit is of why the stock is actually performing quite well over the last 6 months or so. The company's starting to move also pretty aggressively into other areas of financing, including personal loans and auto financing, insurance services, title services. But I do think that the aspects of the acquisition of Redfin, which was about $1 billion or close to $1.8 billion, is becoming accretive to the underlying business. So this is really a story for Rocket that's based on a significant, addition to cost effectiveness and top line sales because of an acquisition strategy, for lack of a better word. And that's why the stock has been moving quite nicely to the upside, despite some challenges, certainly some big challenges in the housing market. Both from the standpoint of mortgage originations, existing home market is very slow right now, but the company itself is doing extremely well because of they're adding additional revenues, reducing expenses, and effectively the acquisition is becoming more accretive, despite the fact that originations aren't necessarily nearly where they could be or where they have been in the past.
George, that's because they have a more vertically integrated business model now. Maybe There's less houses changing hands, but if you own one of the primary marketplaces and then you can offer the loan, makes it a lot easier to capture a bigger market share. Is that right?
That's right. The company also bought Mr. Cooper, which is another mortgage originator. And so this Rocket has become sort of a serial acquirer. Now, it did hurt the shares originally, but this is becoming a company that's gaining vertical integration amidst a challenging market environment for interest rates and housing. So I think right now, if you look at even estimates for this fiscal year, they're expecting profits at 27 cents, which again means the stock is trading around a 50 multiple. But next year, for what it's worth, they're expecting 76 cents, which is basically almost double, if you will, or more than double the EPS. It's trading around 19 times forward earnings. So like I said, the acquisition, the cost synergies, the vertical integration is really the play here on Rocket. But, if you look at the analysts, for instance, Morgan Stanley, they've got a market performer, a sector performer, the $16 price target, because they have said that, the 50% increase in price as of recent may have been exhausted. And there's some merit to that as well, because, it is typically a smaller capitalization-based business, and it's a high beta name, which, again, with the markets moving the way they have since the April lows, that's also, been a primary catalyst for the shares. But like I said, you got to follow the earnings trends, and the earnings trends are positive, but it doesn't mean the stock can't pull back on any market correction or consolidate from here.
George, the ironic thing, too, as a company that's offering mortgages or helping in that process, one would think higher interest rates probably going to be better. But because it's locked up that market so much in real estate in a backwards way, interest rates coming down, if transactions start happening again within real estate and homes, it would be potentially beneficial as well as some of that supply comes back online. But we got to leave it there. Really appreciate it as always, George Tsilis, with some good insights on rocket companies.